Hello, welcome to today's session of real estate in Uganda. Today I'm going to handle a topic that was triggered by a question someone asked me that if they pay for property tax, do they need to pay for rental income tax? Or if they have paid for rental income tax, do they need to pay for property tax? Now, most people use property tax and then rental income tax concurrently as if they are the same. They are not the same. Rental income tax is totally different from property tax. Now, the main difference comes in when a property is commercial or residential. What do I mean? Commercial means it's either a mall or a shop, something like that. And then residential means people are staying in it. You're either renting it out or staying in it as a landlord, yeah? So the rental income tax is collected from any property that is rented out, whether it is residential or whether it is commercial, yeah? That is where rental income tax comes in. And the rental income tax is collected by Uganda Revenue Authority, which is the tax board in Uganda. And then property tax is collected on commercial buildings. As long as it's occupied, yeah, that building is liable to property tax. Now, what happens normally is that property tax is, on the other hand, collected by local government. Now, what is the local government? The municipality, for example, Kira municipality is the one which collects property tax. And it collects property tax only within the Kira municipality, the municipality within which it is. So let's say there is a mall in Kira municipality, and then there is an apartment also, another property in Kira municipality. URA will come and collect rental income tax from that apartment, and also collect rental income tax from that mall or that commercial property. Now, in the same municipality, let's give an example of Kira municipality. The municipality will also come and collect property tax from the commercial property, yeah, the mall or the shop, that is the commercial property, whereas the URA will come and collect from every rented out property, whether it's commercial or residential. Now, what I found out from the municipality is that if a property is commercial, let's say it's a mall, but you have part of it has apartments, that means it's both commercial and residential. They will still tax that entire property, property tax. So that means URA will come and collect rental income tax from you, and then the municipality will also come and collect property tax from you. So that means that, of course, you're being taxed twice. And that is something that, of course, the Parliament of Uganda needs to look into. But surprisingly, at the moment, that's what's happening. And you're going to be taxed by URA and also taxed by the municipality, much as they call it property rate, but it's still the same. I don't see the difference. It's still money being collected from rented out properties, you get. So it's mainly that is the difference between property tax and rental income tax. But still, if you pay property tax, you have to pay rental income tax. So it's a double collection, double charge. But, well, that is our country. We live like that, although the calculations differ. In case you need more details on rental income tax, you can just click on this link right here. It will give you the previous presentation I made on rental income tax and understand it better. My focus today was to mainly answer the question, if you pay property tax, do you need to pay rental income tax? Which the answer is yes, you'll have to pay both. So yeah. So the thing with the URA is that if your property, the residential property is or the commercial property is not occupied, if you have evidence that that unit was not occupied, or that property was not occupied, or it was not rented out, they will exempt you from paying rental income tax for that period. But for the municipality, if they are to collect property tax, they don't give they will not give you a time frame that maybe an excuse if your property is rented out or not. As long as the property is there, whether it's occupied, whether it is on rent, whether someone is in it or not, as long as the property is there, they are going to get property tax from it every year. Yeah, it's not like you are whether you can where you can prove that the property has not been rented out yet. And then what happens is, of course, both monies actually go to URA. URA collects the rental income tax. It goes to a URA account, and then the municipality also collects property tax. It also goes to URA. But then the money from the municipality for property tax that URA gathers from a certain municipality can only go to that municipality. For example, if it is Kira municipality that has collected that property tax, it can only go and serve Kira municipality. It cannot go to Akiso or to any other municipality. It has to serve Kira municipality. You get. Whereas rental income tax can be allocated to anywhere, maybe for salaries or whatever the URA chooses, the government chooses to use that tax for. You get. So those are some of the differences between property tax and rental income tax. If they have paid for property tax, do they need to pay for rental income tax? Yeah, the answer is yes. It's a double tax. Of course, property tax is called property rate, just to make it, I think, to differentiate it from rental income tax. But you have to pay both as long as you own a commercial property. And if it is a residential, then you only pay rental income tax. So, of course, the property. Why does the municipality also have to collect property tax? You see all these things that happen in our communities, in the municipality. For example, road construction, garbage collection. The municipal schools have to be taken care of. The municipal hospitals. This property tax, some of that money goes into taking care of these things, taking care of the municipality to make sure it looks good, and then also the services in it are running. Much as the government also comes and gives a hand, you get, but the municipality has to also collect money, such as property tax, to enable the municipality run well. But you know, I think maybe in both cases, I don't know how they handle this, but because as you're computing rental income tax or property tax, there are provisions where you have to declare expenses that were incurred as you are running that property, and that expense cannot be taxed. It's only the net amount that can be taxed. So I believe you can also declare, if you're paying for rental income tax, you can also declare property tax as an expense. Or if you're paying for property tax, you can also declare rental income tax as an expense. Yeah. So maybe these two can play each other. Both property tax and rental income tax play within there, because in both cases they have to only tax the net amount, not the gross amount. And the gross amount is inclusive of expenses, of which I think a tax is also an expense. If I'm paying for a property tax, rental income tax has to be an expense. If I'm paying for property tax, rather rental income tax, property tax has to be an expense. So I don't know how that plays. I don't know how that plays. Maybe that is why it is fair. You get, it is fair to charge both property tax and rental income tax, because you can always have a chance to declare the other as an expense. I don't know whether that is right, but if I'm declaring an expense, if I'm paying these two taxes and I'm supposed to declare an expense, then those two are expenses as well. Please take a minute to subscribe to my channel, please. Just click the button and subscribe to Real Estate in Uganda. Thank you so much. And as you continue watching, you can leave me a comment, you can like this video, you can also share it if you like to. And I hope this video is helpful to you. And in case you want anything real estate, just come to this page. You'll get quite a number of information on real estate. and you can always leave me a message. Okay, thank you. See you next time. Bye.